Welcome. I'm Larry Stone, your Santa Clara County Assessor. And before we get into the webinar, I have some housekeeping items. This webinar is being recorded and will be posted on the Assessor's website along with the PowerPoint presentation. It's also simulcast on Facebook. Please put questions in the Q&A, and answers to simple questions will be provided or immediately following my presentation by our assessment team. The tax collector's office is also available to answer questions. I want to express my appreciation to more than 20 chambers and business groups who agreed to co-sponsor this webinar. We have over 300 participants who are registered on the call today. Our purpose is to educate commercial property owners impacted by the COVID-19 recession about potential property tax relief that may be available to them. It is exclusively for owners of commercial and income properties, including buildings and land. This webinar is not for tenants like restaurants or hair and nail salons, although they may benefit if they have a triple net lease. Questions about deferring property taxes should be directed directly to the tax collector's office. You know, my objective as county assessor has always been to enroll accurate values in good times and in bad, rather than dealing with the more costly and time-consuming assessment appeals. Assessors are not revenue agents. We don't consider or pay attention to whether property tax revenue is up or down. Assessment or reassessment is established only twice, upon the change of ownership or new construction. Assessors then perform a fee simple appraisal to determine the market value at the time of the transfer of ownership or new construction. That establishes a base year value, which can be increased by no more than 2% per year. The percentage increase is applied annually based upon the California Consumer Price Index as of January 1st. That's the lien date or valuation date provided by Proposition 13. Following the lien date, assessors are required by law to close the assessment roll on July 1st, based upon values as of January 1st. As an income property owner myself, I fully recognize the financial impact of COVID, which hit almost overnight on March 17th, 2020. However, the law sets the lien or valuation date for assessors as January 1st of each year. Therefore, if vacancy is significant or there are other value drivers like rent declines, these factors will be taken into account only as of January 1st. And let me be clear, assessors do not negotiate assessed values. Our decisions are driven only by law and verifiable values. Of the 58 counties in California, Santa Clara County is only one of 10 who notify all property owners in June of their assessed value before the tax bill is sent. In the 48 other counties, the first time a property owner knows their assessment is when they receive their tax bill in October. Taxpayers can file an appeal between July 2nd, the day after we close the assessment roll, and September 15th, the absolute deadline. Today, we're letting you know what the assessor needs from all of you to consider a reduction in an assessment, and we're asking for your assistance in arriving at an accurate assessment. Only the value of the property has been negatively impacted by the COVID recession, again, as of January 1st, 2021. Proposition 8, passed by the voters 6 months after Proposition 13 in 1978, allows the assessor to reduce the assessed value only when the market value as of the lien date drops below the existing assessment. This is important. A Proposition 8 reduction is temporary. It's a temporary reduction and does not change the base year value. After a Proposition 8 reduction is granted, the property's assessment will be reviewed annually until the market value exceeds the base year value. And while a property is being assessed under Proposition 8, its value may be raised or lowered by any percentage each January 1st. Proposition 8 assessments are not restricted by the Prop 13 2% annual maximum increase. However, in no case may a property under a Proposition 8 review be assessed at an amount greater than its Prop 13 base year value. You know, at the height of the Great Recession, my office proactively reduced the assessed value on 136,000 properties, nearly 1/4 of all the properties in Santa Clara County, mostly homes and condos, because the Great Recession was primarily induced by the housing finance crisis, subprime mortgage credit fraud, reducing the assessed value and the assessment roll by $27 billion. Basically, the more recent a property was acquired or constructed, the higher the assessed value, and the more likely the property is a candidate for a reduction. Because the reduction is temporary, it only lasts until the next lien date, at which time the process begins again. If there are further reductions, we will enroll the new appraised value. If the values increase, we will restore the value consistent with the market, but not limited to 2%. The impact of COVID has had on commercial property values vary widely by property type and geography. Hospitality and hotels, of course. Those hotels that depend upon business travelers suffered the most. Restaurants, of course, but not all restaurants. Fast food restaurants like In-N-Out Burger have done extremely well because of COVID. Retail, malls, entertainment, movie theaters have been seriously impacted. Office, it depends. For most of 2020, the office sector in Silicon Valley was relatively stable. Industrial, warehouse, logistics, comparatively strong, with relatively low vacancy. To provide reductions, assessors must determine property by property that the market value has fallen below the existing assessment. We need information and data by February 26th in order to complete our assessment by the July 1st roll close deadline. Now, Assistant Assessor Greg Monteverdi and Chief Appraiser John Recchio will discuss the process to follow and the type of information and documents we will likely require of you if you request a reduction. Greg?
Thank you, Larry. This is Assistant Assessor Greg Monteverdi. And we really want to encourage all of our commercial property owners to take advantage of our proactive Prop 8 review process this year. We are going to change our process this year and be even more proactive than usual. For example, we're going to be sending out 8,000 what we call request for information letters at the beginning of February to property owners who we feel are likely to be affected. So practically everyone in the hospitality, retail, and multifamily sectors will receive a request for information letter. This is going to be a substantial workload challenge for our office, given the extent of the possible number of declines. And so I can't emphasize enough that if you are a commercial property owner and you receive one of our requests for information letters, please get it back to us as soon as possible with a complete response. Those properties for which we have information will receive the first efforts at appraisals. And, you know, given the extent of the workload challenge, it's possible that we may not be able to complete all of them in time. So this year, we're going to take informal review requests earlier than usual. Our traditional method had been to issue our assessment notification cards at the end of June, as you're all aware, and have you review them and take advantage of our traditional review period from July 2nd through August 1st. But what we're going to do this year is start that process earlier as of February 1st. So we encourage you to file an informal review request on our website, which is under construction right now. So what this will do, this change in procedure, will create a greater amount of time for our staff to intake the information and do the appraisal. So it's possible that you will see the result of your proactive reduction as early as that end of June notification card. But we will continue to take requests all the way through August 1st. And everyone who takes advantage of this and files on our website will receive a response from our office as to the status of their assessment review, so that if you're not satisfied with that assessment review, you'll be able to file an assessment appeal anytime within that period from July 2nd through September 15th. So what's the new functionality that we're building right now? We're going to change our website, should be finished by February 1st, and it will allow you to access request for information letter templates, as you can see on the slide. You'll be able to file a new request for Prop 8 review. You'll be able to attach your market information justifying a reduction, which is very, very important. Can't emphasize that enough. And you'll immediately receive a receipt letter verifying your request. And then ultimately, at no later than August 15th, you'll receive a results letter at the end of the informal review. Now, I think the next part of the presentation, I'll hand over to John Recchio, the Chief Appraiser of the Real Property Division, to talk about the types of information that we'll need to do those proactive assessment reviews.
Thank you, Greg. My name is John Recchio. I am the Chief Appraiser here at Santa Clara County. The information that we're going to be requesting is the typical information any appraiser will need in order to perform a fee simple market valuation of your property. This is the same information that you'll be receiving a request in the mail, hopefully the first week of February. And if you don't receive that request for information letter and you believe your property is due a reduction, by all means, go to our website and fill out that request for Prop 8 review. The information we're going to be requesting is, of course, your opinion of value as of the 1/1/21 lien date and the information that you relied on to form that opinion. Also, your best estimate of prospective income and expenses for the 2021 calendar year. And if you have a longer period of time that you think you're going to be affected, please let us know that as well. I know some of the hotel motel industry believe it's going to be more than a 2 or 3 year effect that you'll be under your projected income. So please let us know what your projections are and how you came about them. We also would request your actual income and expense statements for the previous 2 years, 2019 and 2020, and any description and actual cost of any new construction completed or in progress during this last calendar year. And finally, if you have an appraisal that was performed on a property for any purpose within the last 2 years, we would request that you send us a copy of that as well. And again, any information that you feel is relevant for us to determine a new value for your property, please be sure to send that along. We are willing to take any and all information that you want to give us. Now, there are some industry-specific information that will be included in the 441D letters, the request for information letters that we send out. Hotel, motel properties have some specific information related to average daily room rate, RevPAR, occupancy rates. Please send us that information. It will be very helpful for us as we come up to a value for your property. And of course, if you have any change in ownership, please provide the purchase and sale and lease agreements. For multifamily rent rolls for the previous 2 calendar years, the size, the starting and last renewal dates, the terms. If you have vacancies, please let us know what you're asking for those vacancies. If there are any concessions that you're giving for people to move in, please let us know that as well. That's all information we will take into account. For retail and other properties, again, rent rolls for the previous 2 years. And this time we would like the tenant's name, and again, the unit size, the starting or last renewal date for the lease terms, rent escalations on the leases, tenant improvement allowances. Basically, this is all information that any appraiser would rely on in order to come up with a new value for the property. And again, your projections going forward will be critical, so we know what you're expecting and how to build that into our appraisal for your property. Greg?
Thank you, John. We've had several questions come in before the webinar started, and so the most common or frequently posed questions we thought that we would attempt to answer for you all. So the first one had to do with can a business owner request a waiver or reduced unsecured property tax for the business since the business was temporarily closed for 9 months in 2020 due to COVID-19? And the answer is that the assessor's office does not grant waivers, nor do we have anything to do with the collection of taxes. But we will be considering assessment reductions of business property due to inutility or a decreased usage of business property. This has been done in the past, but probably never on this wide a scale. So we're actually just looking into the process again, and going to be discussing this issue with other assessors throughout the state to see how these can be justified reductions. Question number 2. COVID has placed a financial burden on tenants and landlords that, to this point, have not been reflected by Santa Clara County tax officials. Will there be tax deferment or tax forgiveness? In general, there are very limited options for tax deferment, limited to penalty cancellation for property owned by small businesses. However, of course, we will be working to proactively reduce secured property tax assessments to the market value of the property as of the lien date. And then if you're unsatisfied with the property tax assessment on the notification cards mailed at the end of June, you may file an assessment appeal. We're fortunate today to have Sylvia Jefferson and Jocelyn Ma on the line. And I didn't know if they wanted to comment any further on tax deferment or penalty cancellation. Sylvia or Jocelyn, do you want to comment?
Thank you, Greg. Yes, hello everyone. My name is Sylvia Jefferson and I work for the Department of Tax and Collections. So generally speaking, tax and collections is also administered by legal regulations, as Larry had described earlier. There is a little bit of leeway for the tax collector to reduce penalty cancellations or waive them. And also the governor has an executive order that allows deferment of payments until May 6th for small business owners. But the Department of Tax and Collections will take every situation under consideration on a case-by-case basis. So please visit our website, which will be included in the chat, and there's also a link on the assessor's website to file a penalty appeal if you feel that you would meet any qualifications.
Thank you, Sylvia. And I do recommend going to the tax collector's website to read about that, because it has some very good explanations there.
Greg, do you want to finish the questions?
I'm sorry, can you hear me now?
Yes, we can. Thank you.
Sorry.
No problem.
Due to the moratorium, landlords can't evict tenants who can't pay the rent. What's the relief landlords have that are still obligated to pay the ever-increasing property taxes? And of course, the only relief that is available via the assessment process is this Prop 8 proactive review, or the appeal application that you can make if unsatisfied with the proactive review or proactive reduction. Item number 4. Also, why the value of improvement increases as the value of the land? Shouldn't the value of the improvement depreciate year to year? And by law, the way assessments work is that unless there's a temporary decline in value, the base year value of both the land and improvements increases by a maximum of 2% annually. And then how and when can I apply? This is something that we just talked about, and can't emphasize enough that our proactive sort of effort to look at the properties starts basically February 1st. You should be receiving these request for information letters at the beginning of the month, and please come to our website at that time to request a proactive review. And as much as possible, take advantage of the website, and please don't give us a call. That makes us more efficient if we all use the website as much as possible. Next set of questions. So how do we confirm if the market value will fall below the 2020 assessment? So we have a longer review period, obviously, and starting in February 1st. So your first opportunity to really see the result of that will be with the notification of assessed values at the end of June. Thereafter, we close that assessment roll, and if we make changes after the end of June, then you'll be receiving a roll correction notice of a reduced assessment. And at the midpoint in August, you'll also receive a letter with the results of your assessment review. So how will the new values be determined? So of course, we're going to be relying on our staff to do fee simple appraisals of the market value of the properties as of the lien date, considering factors such as the market rent, the occupancy, cap rates, and other market value determinants. At this point in the year, we have not seen a lot of data in terms of the sales comparison approach or actual sales in the market. So we will be leaning heavily on the income approach for determining value. So question number 8, income for 2019 was down 60%. How will you calculate my assessment? So of course, net operating income is clearly a determinant of market value for commercial property. We'll consider the reasons for the decline in NOI, project how long it may be in decline, and perform an appraisal of market value as of the lien date. We'll either use a direct capitalization approach or a discounted cash flow analysis, both of which can be considered in an appraisal. And then the next question had to do with exemptions. And exemptions really don't apply to Prop 8 assessments. And they are quite complicated, and there are a number of different types of exemptions, from the typical homeowners exemption to the disabled veterans exemption to institutional exemptions. So we encourage anyone with an exemptions question to contact our exemption unit at that phone number below or at our email address referenced there. And finally, something that we've already talked about is, when will the 21-22 Prop 8 decline in value request form be available? And again, we're shooting to have that all available by February 1st. So I think right now what we can do is open the presentation up to additional questions. We have a number of staff on hand who can answer them, including some of the supervisory staff in the real property division. So David, if you can open it up to questions.
Yeah, if people with questions can raise their hands, and while we're preparing for that, I'm going to read a few questions in the chat box in the Q&A, Greg, and maybe if somebody, either you or John or others can weigh in with a response. One question came from Mr. Scott Yang. Said, it seems that the assessor are requesting information to compare between 2019 and 2020. What if the income of 2020 was similar to 2019, but will drop considerably for 2021?
I'll take that one. We would still want to review that request, even if we didn't see a market difference in the immediately preceding year. So for example, during the calendar year 2020, part of the appraisal process is, to look at the property's perspective, outlook. What would it be going forward, but as of January 1st. So if the outlook looks bad and you can see vacancy going up, then we would want to take a look at that property as well, though it wouldn't be necessarily as a convincing case as something that had suffered from something such as severe vacancy loss in the preceding year.
Thank you. Some people have asked if we could just repeat again the dates for submission for the Prop 8 reductions, and that would be on February 1, we will be opening up our online system, and we are asking people to get us information as soon as possible, ideally by February 26, so that we have time for our staff to use the data and to perform the appraisal. All right, I'm going to move to our first inquiry we've had from Mr. Bharat Patel. I'm going to allow you to talk. Please proceed. Okay, I'm going to move on to our next person with a hand raised, Anthony Martoroni. I'm unmuting you, trying to. You will need to unmute yourself, please. We are having problems with the Mark Millett. If you can unmute yourself, well, take your hand is raised.
Yes, thank you. So I'm looking at a retail shopping center with multiple building pads, and one of them is a 7,800 square foot restaurant, was a salad bar, self-serve buffet with 250 person seating capacity, and that chain declared bankruptcy in April. Market wants the site to be a car wash, but the controlling interests through the CC&Rs of the shopping center say not possible, and there's no interested tenants. Because it's a single parcel with 3 building pads, how does that work?
Who from our team wants to take that?
So this is John Recchio, the Chief Appraiser. I'll take that one. So what we'd be looking at, of course, is the value as of January 1st, 2021. And if that property is vacant, we would definitely take that into consideration. And then do you have any advertising out there right now for this property for asking leasing information?
It's limited. I've got a number of brokers that I'm working with. I had a broker signed up at the beginning of last year, and I let their term expire when they brought me 0 interested parties.
Okay. So in cases like this, we'd be willing to work with you to figure out how your projection is carried forward. So how long do we believe that it's going to remain vacant? And then, you know, what it may lease up for in the future. So this is going to be difficult to do, and we recognize that. It's one of the reasons why, you know, even though we're anticipating sending out 8,000 letters, we may not be able to get to all of them by the August deadline, because each one of these is going to have unique circumstances. But we were willing to take a look at it, take all your information. If your brokers have sent out flyers or, you know, made it available for lease and you didn't receive any information related to that, we'll look at that information.
I had one tenant who was interested in paying less than the salad bar restaurant.
Right.
They say, well, after we take possession, give us a year of free rent and then give us 3 years of TI allowance.
And yeah, I mean, it's stuff like right now, you know, if that's what the market's demanding, and of course, one tenant doesn't determine the market, but as we get more information from all the property owners, we may be able to develop something that tells us what the market is actually doing overall. And that's the information that we would use to value the property.
Yeah, or other cases are, you know, this is a $350,000 a year gross rent site, and we'll take half of it for $125,000 and you subdivide.
Right. And so, yeah, all that information will be valuable for us to get because other property owners may be in the same condition.
Yeah.
And if that's what the market is, we don't determine the market, we reflect the market. So if that's what it ends up being, we have to recognize that.
Thank you. Because it's just, you know, it's a question. That particular property has also been owned since 2001. So you may decide it's undervalued because of the cap for so many years.
Well, yeah, that's it. The Prop 8 reduction would be relative to what you're on the assessment roll for.
Mark,
Right.
I'm going to move us on to our, we have some more people waiting on questions. If that's all right with you.
David,
yes.
David, it's Dawn.
Go ahead,
Just
Dawn.
real quick. This is Dawn Steeslick, the Assistant Chief Appraiser. Sir, and to anybody else that's out there that's having these difficulties, one of the other expenses we would be asking for is any leasing commissions or information, because we may have to do like a rent loss scenario for some of these situations where we would be looking at that as well.
Thank you.
Thank you very much. We have a question for the tax collector's office. It says, what burden of proof does one need to defer taxes until May 6th? We've been closed 10 months. I have money to pay some mortgages and property insurance, but property tax is the last priority after food and medical.
Okay, yeah, that's a great question. Thank you for asking. And we definitely empathize with how difficult it is to run a business during these COVID times. So we would be looking for anything like your bank statements or any type of documentation like you've just declared in your question here that you can send to us with your penalty appeal request, and we will definitely take a look at it.
Thank you. We had another inquiry online about whether Proposition 8 applies statewide. Yes, it does. The methodology, what we are approaching, this is how we are going about it, but the law is statewide. So I'm going to move to our next individual, Mr. John Shank. I'm going to unmute you here, and please go ahead and ask your question. Give you a second here to unmute Mr. Shank. All right, we are going to move on to Sophia Ma. And we're asking you to unmute yourself. There you go, Sophia Ma, please go ahead.
Yeah, actually, my question was similar to the other one. We have property in San Mateo County as well, but you just answered that question. Do you know if they'll have a website available, or do I just need to contact them?
I think you're best just to contact the assessor. They often have information on their website, like we do, about the Proposition 8 process.
Okay, thank you.
Thank you. I'm going to move to Catherine Chen. I'm going to unmute you now. All right, Catherine, and you're not coming on, so I'm going to move on to our next individual. I apologize if I mess up the name. It's Vipul Dayal.
Yes, hi, can you hear me?
Yes, we can. Thank you very much. Go ahead.
Perfect, yeah. First of all, thank you very much for being proactive and putting this together. We really appreciate it. My question is, just so I understand, if we ask for a reduction here under the Prop 8, and then let's say hypothetically the business starts to go up in value by more than 2%, are we capped under Prop 13? Is there a cap under Prop 13 if we do the reduction under Prop 8? I guess is what I'm asking.
Larry or Greg, do you want to take that? Larry, if you're muted, I think.
Yeah, okay, yes. I mean, if you're in a Prop 8 situation, then the 2% limit does not apply. Let me give you an example. During the Great Recession, when we were coming out of the Great Recession in 2012, 13, 14, 15, the values were going up by more than 2%. So if you were in a Prop 8 reduction, we were actually restoring assessed values, in some cases 9, 10, 12%, until you get back up to your existing assessment or your base year value. And then all the protections of Proposition 13 kick back in, and it's limited to 2%. So, and it also is if values continue to drop. If you get a Prop 8 reduction this year, but the value continues to drop next year, because it's on an annual basis, we would continue to reduce the value to reflect the current market value at that lien date. Now, when markets, we hope, will all come back at some point in time, and as they come back, we will follow the market, not the 2% cap.
Thank you.
Thank you. We have had a question about does the net operating income include mortgage interest expense? Let's get very detailed and specific. I don't know, John or one of your team. Don, go for it.
It does not. In terms of interest, we cannot include that in the income stream.
Okay.
So if that's the question that you're asking.
That was a question from a Saul Altabet. And we had another question having to do with what is the date for the assessor to respond to the request for the informal review. So once you have submitted your information in February online, what are the next steps people should expect? John, you want to take that?
Sure. So when you apply online for this review, you will receive an email stating that we did receive your application and that we will be reviewing your property. For all the work that we do prior to the close of the roll in June, the value will be reflected on your notification card, and that will be the notice that you receive. If we don't get to it by that time, and we do work after June and reduce your value further, you will receive a roll correction notice from the value that was on your notification of assessed value card to the new value that we've determined. If we cannot get to your property because of the workload, on August 15th, you will receive a letter stating that fact and that we recommend you file a formal appeal. That doesn't mean we're going to stop working these. It just means in order for you to protect your rights, we recommend that you file that appeal. We will continue to work these as long as we can to make sure that we get the values on the roll correctly. I hope that answers the question.
Thank you. I'm going to go back to a top of our list in terms of people with hands raised. Bharat Patel, are you able to unmute and participate? Okay. Anthony Martorona. And Catherine Chen are the three with hands raised. They are not choosing to participate. That's fine. Hopefully we've been able to answer your question. We did have a question in the Q&A that says, if retail rent is paid from PPP loans and not the business activity, will the assessor look at such income as rental income to substantiate its income approach? That's a good question.
Yeah, this is John Recchio. That's something that we're going to have to determine as we get the information. As of right now, I don't feel comfortable giving a yes or no answer on that. So that's to be determined at this point.
Thank you, John. Okay. Okay, we have another question. Given the reality of the drop in demand and rents for Class A apartments in the county, as business has made a fundamental shift to its operations to promote remote working, to set a new base year value, will assessor use comparable sales that occurred prior to COVID's impact on the market? Who wants to tackle that?
Jeff, do you want to take that one?
Are we talking about a prop date or a base year value? If we're talking about prop date, what we're trying to do is we're trying to estimate the value as of January 1st, 2021. And so the best rent comps and sales comps that we'll be using will be around that lien date. And thus the sales comps and rent comps that you see pre-COVID are not going to be good representations of that January 1st, 2021 date. So yeah, either for prop date 2021 or base year value, we're going to try to use the most appropriate sales comps and rent comps for that period in the market.
Mr. Shank, did that answer your question?
I was actually asking about a base year.
And then what is the date of that base year value change?
September of 20.
September of 20, yes. So that would be highly affected by the effects of COVID. And so we would try to use sales comps and rent comps that reflect some sort of the effect of the current market conditions.
Yeah, and I guess my question is also, just to dig a little deeper, that there are no sales comps. I mean, I guess we may need to, pull a sales comp from, I don't know, Nevada or something to find anything. But there's just none, even in the county, that would be applicable, which I think is just a reality. So that's why I'm just wondering if you all have a perspective on how this will be approached.
So we'll try to use different approaches to value. Income approach, probably use a DCF in order to figure out what an investor would be thinking if they were to purchase a property in September.
Got it. No, I understand. It's going to be a challenge across the board here. And just as someone else mentioned, I just want to thank you guys, Mr. Stone and all, for being proactive in this way. It is super helpful. In my own 2 cents to follow up on my PPP loan as rent question, I just don't see it that way. It's just a small percentage of the rent, but it's not frankly, it's just a reflection of how bad the retail, I'm speaking of retailers in my case, but the retail commercial real estate market is, that it needs government subsidy. But anyway, thank you all.
Thank you.
Thank you.
We have a question from a Mr. Richard Harris, who asks, we own several commercial buildings with smaller service-oriented tenants. We've provided them with deferred rent, but we don't think they will survive the downturn and will leave without paying deferred rent. How will you value this sort of situation?
So yeah, this is John Recchio. We will take a look at that, but realistically, it would depend on what the projections are looking like going forward. And that's, of course, always what any investor is going to look at when they decide whether or not they want to buy a property. So as Jeff mentioned, we'd be looking at, income projections going forward. How long will the market stay affected by COVID? What are the market conditions that we would anticipate as we come out of COVID, and do some type of a DCF based on that basis?
Thank you. We have a Mr. Christopher Berner who asked, for new construction completed in 2020, but unable to open business and receive income, how is the base year value determined? Is a prop rate appeal available? How is the loss in value quantified?
So if the construction is complete this last year, obviously there has been no tenant in it,
Right.
then we take a look at what that projection, again, it all comes down to looking forward in the market. So if that building is going to sit vacant for 2 years and we anticipate it leasing up at a certain rate after that, that's where we do our discounted cash flow and we'd say, okay, based on this information, we would anticipate that an investor would pay X for the property. So it's all based on projections and what we think the market's going to do in the future, which is always very difficult to do.
Terrific. Well, I think we've actually exhausted all the questions, and we have lots of information that'll be on our website. We really encourage people to go to our website. That's our best place. And I now want to turn it over to Assessor Larry Stone to close us out. Thank you very much. Larry?
Well, thank you very much, staff, particularly my staff. You know, as I mentioned earlier, my job is to put accurate values on the assessment roll. And when things are, you know, in Silicon Valley, things move up and down fairly rapidly. And when they're up and we have good times, it's very, very good. But when things turn down, particularly in the environment that we're in Silicon Valley, the descent can be fairly dramatic. The difference is that COVID happened overnight. So you didn't gradually move into a recession like normally happens during normal times, but businesses were shuttered overnight, which creates pretty complex appraisal and value situations. But there's a lot of people that believe, a lot of economists that believe that Silicon Valley was in such a strong position before COVID that we're probably in a better position to take advantage of the recovery, which is really based upon the getting COVID under control, which is based upon people feeling comfortable of going to movies again and getting on airplanes again and going to a restaurant. And that's based upon the vaccination percentage, I guess you'd say. I'm not a medical doctor, so I don't know a lot about that. But when people begin to feel comfortable again, I think there's enough pent-up demand that we may move out of this more quickly than we did. You know, the Great Recession really didn't end until about 2015. It lasted for about 6 years. Hopefully, that kind of extension of the COVID recession will not occur. But again, my purpose is to put accurate values on the roll, and we require, as this webinar has indicated, we require information. We just don't, we just can't take information provided to us verbally. Any different than when you're building your property or buying a property, you go to an appraiser, you go to a bank or a lender, and they do an appraisal. We do exactly the same thing. And also, as David said, in order to take, we have a very robust website. I get a lot of compliments on our website and the ability to navigate through our website. And the more you all can use our website rather than the telephone, the more time we have in dealing with the significant issues that we're going to have, and we know we're going to have. That's why we're having this webinar going forward, to get the right value on the roll, to take care of as many of your Prop 8 review requests, and get the right value on the roll to you. And it's important because, as I said, we're one of only 10 counties out of 58 that provide information to all property owners prior to getting the tax bill. So this allows us to make corrections, if you will, between the close of the roll of July 1st and that August date. So you'll get a correct tax bill. That reduces the opportunities that people have to file an appeal, because we get it right even after the roll close. If we make a correction or make a change in your assessment, then you'll get an accurate tax bill in October. And that reduces, of course, the number of appeals filed. So I want to tell everybody, particularly our sponsors, we thank you very, very much. We plan to do this. You know, we've learned a lot with COVID toward these Zoom hearings or webinars. We would normally get 50 people on a call like this or on a question like this if we had to do it in a room, and you'd have to buy a lunch and listen to me. Here we get over 300, so it's more convenient, more effective and efficient for us to communicate this way than we used to do in the past. So thank you very much. Please use our website and have a good afternoon.
Okay, that